The Australian property market is, well, it's a real puzzle, isn't it? Prices are just soaring, but at the same time, we can't seem to build new homes fast enough. So, over the next few minutes, we're going to try and unpack this whole complex picture. So, here's our game plan. First, we'll look at the market's pretty incredible rebound. Then, we're going to dive deep into the supply and rent squeeze that's putting pressure on, well, pretty much everyone. After that, we'll see how policymakers are trying to walk this very fine line, and we'll finish up by exploring what the new playbook for property investors looks like. All right, first up, the comeback. Let's explore the dramatic return of confidence and capital to the property market, because things have gotten seriously supercharged over the past year. A huge piece of this story is the return of the investor. I mean, look at this. 5 years ago, they made up about a quarter of all new home loans. Fast forward to today, and that's surged to nearly 38%. That massive influx of cash is a key reason the market is running so incredibly hot. And all this activity, it's pushed national home values up by a staggering 6.1% over the past year. Now, just to put that in perspective for you, that is the fastest pace of growth we have seen in over 2 years. The market is absolutely flying. And this boom isn't just a Sydney or Melbourne story anymore. Not at all. We're actually seeing the strongest growth in cities like Perth, Brisbane, and Adelaide. Even regional towns are getting in on the action, posting double-digit gains as people hunt for better value and maybe a different lifestyle. Okay, so all this demand, it leads us straight to the central tension in this whole story: the massive squeeze on housing supply and, of course, the rental market. The entire system is just under intense pressure. To try and deal with this housing affordability crisis, there's a really ambitious national goal on the table. The target? To build 1.2 million new homes by 2029. It is a huge number, designed to try and ease some of this pressure. But, and this is a big but, here's the problem. Hitting that target means we need about 20,000 new home approvals every single month. And if you look at the latest figures, well, we fell way short of that. It's creating this big construction gap that we're really struggling to close. So why can't we just build more? Well, it's not a simple problem to fix. It's more like a perfect storm of planning delays, crazy high costs for land and materials, and a critical shortage of skilled workers. The bricklayers, the carpenters, the tilers. These are the 3 big barriers just holding everything back. Now, this supply shortage has a direct and, frankly, a pretty painful impact on renters. With so few new homes being finished and all those investors coming back, the national vacancy rate has just plummeted to a razor-thin 1.2%. And with almost no properties available, landlords really have the upper hand. Rents have climbed nearly 5% in just 1 year, pushing the average weekly rent to over $650. I mean, that is putting immense pressure on household budgets right across the country. So how are policymakers and the banks trying to handle this? It's a real high-stakes environment. They're trying to walk this tightrope between cooling the market down without completely crashing it. The Reserve Bank has been trying to juggle inflation and growth. So we had 3 rate cuts earlier in the year, but then, surprise, some hotter-than-expected inflation data came out, and that put a 4th cut on pause. So now, buyers and investors are just kind of left in limbo, waiting to see what's going to happen in early 2026. And then there's the big one, the huge political fault line, negative gearing. It's that tax break where investors can deduct losses on their rental properties. On one side, you have people saying it's absolutely essential to keep rental supply up. On the other side, critics argue it just fuels price bubbles and locks young people out. It's a massive debate with no easy answers. Meanwhile, over in New South Wales, the government has frozen land tax thresholds. So, as property values keep rising, more and more investors are going to get pushed over that threshold and have to start paying. It's a form of bracket creep, really. It'll raise billions in revenue, sure, but it could also mean landlords just pass those extra costs straight on to their tenants. Other governments are trying different things, like protecting renters more directly. States like Victoria have banned rent bidding. But as this quote suggests, a lot of critics argue that if you don't fix the underlying supply shortage, these kinds of bans are just treating the symptoms, not the cause. They say landlords will probably just advertise their properties at a higher starting rent from the get-go. So where does all this leave us? Let's look to the future, because the old rules of property investment are being totally rewritten by new risks and actually some new players. You see, savvy investors are now looking beyond just simple price growth. They're focusing on areas that are set for a real transformation, thanks to major infrastructure projects like the 2032 Brisbane Olympics. That's $7 billion in investment. That's a once-in-a-generation catalyst that is going to reshape that city's entire economy. But, and this is a big one, a stark new risk is emerging that investors just cannot ignore anymore. By 2030, it's predicted that 1 in every 25 Australian homes could become effectively uninsurable because of climate events like floods and bushfires. This isn't just an environmental issue, it's a fundamental financial risk that could wipe out property values. And finally, the face of the investor itself is changing. Think about this. Women typically retire with 42% less superannuation than men. So we're seeing this growing movement of female investors turning to property as a really powerful way to take control of their financial future and close that wealth gap for good. So, what's the big takeaway here? We have a market that is in a profound state of flux. You've got high prices clashing with this desperate need for more homes, you've got policy levers being pulled in every direction, and all the while, these new risks, like climate change, are rewriting the rulebook. It really leaves all of us with one critical question. In a market like this, what is the future of Australian property?